Hello, everyone. My name is Javon Foster. Thank you guys for joining in today. For this training, we're going to be discussing divergence. Now, what is divergence? Divergence is when price is moving in the opposite direction of a technical indicator. Divergence warns traders that the current price trend may be weakening, and in some cases may lead to price changing direction. In other words, divergence help traders help traders uh, identify when the market is going to reverse, right? Reversal into the opposite direction. Now, the indicators, right? I put two because I just added this last one just now, but it's three indicators that I recommend to use for divergence. It's the three indicators I've used either in the past or currently using. And no, I do not recommend using all three indicators at the same time, right? There's no point of using all three indicators at the same time, right? So the indicators that I recommend is the awesome oscillator, the RSI, and the MACD. The awesome oscillator and the MACD are kind of similar, right? But in this training, I'm just going to focus on the awesome oscillator and the RSI since we specifically just focus on divergence instead of the MACD, right? But it will be the same concept. The MACD, if you to decide to use that indicator, it would be similar to the awesome oscillator, okay? Now, before I show you guys real life example of divergence, I want to actually take you guys over here and show you guys this cheat sheet, which will be provided to each and every one of you guys, so you guys can review as well, print out in half. And it's this right here, the divergent cheat sheet. Let's see if I could zoom this in a little bit. Can I zoom in? Zoom to fit. Let's see. Okay, there it goes. So, okay. So we have bullish divergence and we have bearish divergence. At the top, these three divergences at the top are bullish divergence. There's three types of divergence. We have regular divergence, right? Once again, is when the indicator is moving in the opposite direction from price, right? So as we see over here at the top, price, right? We're looking at the peaks is going upwards, while the indicator is actually going downwards, right? That's indication for reversal for price to continue going up for divergence, right? We have hidden divergence. You see that price is going downwards while the indicator is going upwards, and that's also another another example of price reversing. And then last, we also have exaggerated divergence. Now, what is exaggerated divergence? That's basically saying that we have an equal low, either on the indicator or on when we're looking at the candlesticks, right? We're looking at price. We have an equal low or an equal high, which I'm going to show you down here, and the indicator or the price is showing something different, right? So, for example, down here, this is the bearish divergence. Price is going downwards while the indicator is going up, right? And when I said the indicator is going up, we're looking at the peaks, right? Hidden divergence, indicator is going downwards while price was going up. And exaggerated divergence, we have an equal high, but the indicators have lower highs, right? Over here, for the bullish exaggerated divergence, we had equal lows, right? But the indicator has higher lows, okay? So once again, this is what traders will use to this is what traders will use to identify when the market is going to reverse, right? And we use it as a confluence with other things, right? So we look at the trend of the market. We look at if we see a reversal pattern. It could be head and shoulders. It can be a harmonic pattern, right? You can spot divergence at the supply and demand. We have double tops, double bottoms, and all those other things, right? As you use divergence with as confluence to strengthen your analysis. Okay, so let's take a look on the actual. Let's take a look at the actual chart and spot some divergence. Now, if anyone after this training, if anyone still have any confusion about divergence, as you guys know, you have the privilege to schedule a one-to-one mentorship where I can get a little more deeper into divergence with you. But for now, sorry, let me take a sip of water. For now, I want to keep it very simple, right? And keep it at a basic level that everyone can understand. But if you want to go a little more deeper, feel free to schedule a one-to-one on Wednesday. Once again, the time for one-to-ones are on Wednesdays from 1 p.m. to 3 p.m. So feel free to Eastern Standard Time. So feel free to schedule a time within that with me, and we get 1 hour and we can review. Right, come with questions. Please watch the training videos before and come with notes and questions. Okay. All right, so let's look at real life examples. Um, at the bottom here, we have the awesome oscillator, which is the top indicator right here, the green and red. And here at the absolute bottom, we have the RSI. And we're gonna look at the purple line, okay, for the RSI. So let's take a look. Let's see if we can spot some divergence. So we're on the 15-minute time frame, right? We're just gonna stick to the 15-minute time frame for now. I just want to simply show you some divergence, right? So, and once again, in simplicity, diversion is just simply the price is doing something opposite of the indicator. That's it. All right. You don't have to overcomplicate it and think too hard on it, right? And when we're looking at divergence, we tend to look at the peaks, not the stuff that's going on in between. So, we see that price came all the way up here, right? This is the first peak. So I'll put a 1 there. And price came down, is doing all of this, and then price get to a high point right here. So that's the second peak. That's the number 2. Now, if we come down here and we look at the indicator, we could spot the peak over here. That's 1, right? And then we can spot on the indicator as well. And we could spot the second peak even over here. That's 2, right? Now, what you notice is that price is going upwards, correct? While the indicator, right, from this peak to this peak is going downwards. That right there is divergence, right? We can with that we can see that the trend was getting a little weaker and price is looking to pull back. And my team and I was able to capitalize on this. 15 pip risk. TP1 was 20 pips, and we on our way to TP2, which is 40 pips. Okay. And that was the awesome oscillator. I love using it for divergence. In my opinion, right, it's a little more cleaner, but use whatever indicator that's clearer to you, right? That you understand better, that makes more sense to you. Okay. The RSI is actually really good as well because it can tell you when price is overbought, or oversold. Even though there's no real such thing as price being overbought, oversold, right? But it gives you an idea when price basically needs to cool down, or it needs to start build back momentum, right? So over here we see the RSI is over 75, right? That's pretty high, right? That's indication that price may want to start go bearish. But when we look at this peak here and then this peak, we see that price is also going downwards, right? While the indicator was while we see that the indicator was going downwards, sorry, while price was going upwards, right? That's an indication that price may look to reverse, right? Am I saying, and also guys, not because you spot divergence mean you need to sell right away, because price can continue going up and up and up and up for a while, right? So always, divergence is just an extra confirmation, an extra a thing on your checklist, right, before you enter a trade. You also want to pay attention to structures, right? We have lows and highs within the market. We want to pay attention to those. We want to pay attention to a trend and see if anything is being broken out, right? So just, even though this is not a full top-down analysis, right, if we just look at this over here, once again, so we're looking at this peak over here, right, and this peak up here, right? And we see that price is going upwards. Look at that. And we see that the indicators are going downwards, right? Divergence. Okay. Now, and we're looking at the purple line over here as well for the divergence. So that's one. Now you can, once again, never enter a trade blindly just because divergence. What we notice over here, we starting to have lower highs, right? You can actually mark the trend here. This is not, once again, a full top-down analysis. I'm just showing you something, right, as an example. You can mark out your trend over here, guys. You see that, price came up here, created a low, then it gave us a lower low, broke that low plus the trend, right? Nice indication for entry to take this trade coming down, right? So use it as confluence, right? To your to take it to take setup. So let's look at some other divergence, right? Let's see if we can spot something else. Let's see. Right, this right here is divergence, right? This is where you call a hidden divergence. So once again, if we look at this peak, this low right here, right, and then we look at this low right here, right, this is where you call a hidden divergence. Let's delete these two lines, right, as an indication for price to go up. This is what you call a hidden divergence. Now, when we look at the RSI, we can see that this peak over here, right, is higher than this one over here, right? So let me just move this out the way for you guys to see. I am just clear this up actually so you guys can see better. So once again, we can see that this peak right here is coming down here, right? And if I were to put that up, look at this. So we have this peak, right here is higher than this peak, right? Now I'm gonna put a line there, right? And then we're gonna look on the actual chart, right? And see if price did something opposite, right? Look at this. Okay. Now let's go on the chart again. Now look what happened. This peak is lower than this peak, right? So this is saying that the peak price is going downwards, right? Lower lows, but this is showing higher lows. Higher lows, right? So this is showing lower lows, the indicator, but price is showing higher lows. That is called hidden divergence, right? And that's another indication that price that you can use, right, to take the setup that price is going to go long. Okay, take a setup that price will go long. Okay, now as you can see, I have a supply and demand area over here, and what we can look at is that price kind of did a break and retest off a structure over here, right? So you could, you could do confluence with that, even if you use a fibs, and from that low to that high right here, we see that price right at this level was a 618, right? That it just bounced off from. So if we move this out the way again, right, you can see that price came to that 618 and then reverse, right? So this is how you use divergence with confluence of other things, using the fib retracement, using structure, right? To take that setup to go long. Okay. We can look at candlestick pattern, coming off that area and combine everything together on your checklist. Let's see if we could spot some other divergence, guys. Let's see on the awesome oscillator, did it give us divergence there? We do have hidden divergence. And how you know it's hidden, right? This low is above here. Well, and this low is beneath here, right? So that is a hidden divergence. The RSI was a little more cleaner in this example than the awesome oscillator. So once again, whichever one that you can understand a little bit better, and whichever one that that's cleaner for you to understand, that's the one try to use. Remember, once again, use MACD or the RSI. This at the bottom is the RSI. Let's see if we can spot some other divergence, right? Let's see. Got it some more. Okay, let's see if we have some divergence. What about over here? Let's see. Nope, no divergence. Okay, we have a exaggerated divergence here. Over here, once again, we can look at these peaks. This is exaggerated divergence, right? We have same equal low, right? Prices at the same level, right? But we see that the indicator, right, the lows is going downwards like this. So once again, let me just open that up. So right, so we see that the low, right, prices right here is going downwards. Look at that. While the indicator, now this is the indicator, sorry. While price is at the same level over here. That is called exaggerated divergence, right? and it's just indicators doing something opposite from what price is doing. And that was an indication that price wanted to go bullish, right? And if you were to trade that, that would have been, say you got off that engulfing candle there, that would have gave you a nice 40 pips, good profit. Okay. So also you can see here in the awesome oscillator, right? We have this low, right? And price coming here, right? It's a lower low while the lows are equivalent, right? So beautiful divergence. Let's see if we can spot some more. Let's see if we can spot some more. Let's see. There's divergence all over the place, guys. Just gotta, keep looking, keep looking, keep looking. Yeah, this was some divergence, but oh, look at that. No, not divergence, sorry. Oh, actually, divergence. Yes, 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 yes. Look at this, guys. Price from this peak coming all the way down, right? Right, and we can spot divergence from all the way over here, but as you can see, it wasn't time yet for price to switch up, right? And then we have this peak from that same level coming down, right? We see that price is going upwards. Look at that. So once again, let me open that up. You can see that from this peak, right? Price is going, the peaks are going upwards, right? And there was divergence since over here, right? But remember I said we combined it with structure. It indicates that the trend is getting weak and it's going to reverse, but that'll mean that it's going to reverse at that moment, even though we had divergence between here and here already, right? So same thing on the indicators. Look, we have a lower low here, higher lows coming over here. That's divergence. Look at that, right? Lower lows, higher lows going upwards, divergence, right? While price was coming down. Now, remember I said we combine this. You could combine this. You don't just go off solely divergence, combine it with simple, look at a trend within here, right? So that's the trend. Let's use a red line for that, right? That was the trend. We see that price is giving us lower highs, lower lows. Look at that, right? So we get, price to break out of that trend, breaking that high. We didn't get a retest, but, we could look to take that setup, continue going up, right? So that is how you'd use divergence with, combine it with trend lines and structure, right? So you did take that setup, the price did go up, and then, that gave you a nice 100 pips trade, right? 1 to 2, basically. Okay. And, guys, we can do this all day with divergence, but I hope you guys, once again, let me just kind of this. I don't want to be too confused. Let me zoom back in a little bit over here. Okay, so once again, guys, let me just clear this up, make it a little clear for you guys. Feel free to take a picture of this. Back test this, guys. Just go on your trading view, back test everything we review. And anything that doesn't make sense, just write a question, schedule a one-to-one with me, and we can literally just go in depth, you and I, on a personal one-to-one for 1 hour straight, breaking everything down, make sure you have a better understanding. The goal is to make sure you guys learn this material so you guys can excel and be your own boss, right? So once again, what is divergence? Divergence is when price is moving in opposite direction off a technical indicator. What technical indicators? There's so many guys you can use for divergence. You can look at the awesome oscillator, RSI, the MACD. There's individuals that use the volume indicators, right? There's so many indicators that you can use for divergence. Divergence warns traders that the current price trend may be weakening, and in some case may lead to the price changing direction,